Moving higher this morning, one of the chip stocks getting a boost off the back of AMD's upbeat earnings report. But what's really driving this narrative surrounding Nvidia this morning is the call that we're getting out from Morgan Stanley. Morgan Stanley once again naming Nvidia a top pick here, a top U.S. chip stock here pick for Morgan Stanley. The first time that it has named Nvidia that in 6 months. Now, this move follows the recent sell-off that we have seen in Nvidia stock. You can see that towards the right-hand side of your screen. And Morgan Stanley essentially making the argument that the stock has, quote, sold off on a large list of concerns that we think are likely to fade with time. They went on to talk about AI capex levels remaining positive. Nvidia is still at the center of the sector, even as competition ramps up. So they're saying that there's a lot to like in Nvidia stock right now. You're still looking at year-to-date gains of just over 100%, one-year gains of 121%, but we are well below the all-time high that we did hit for Nvidia's stock, with trading right above $100 a share following that stock split. So again, Morgan Stanley at least making the argument, Brad, that there's still a lot to like within this name, and that it's actually set to move to the upside following that correction.
Yeah,
or move lower, sorry, not correction.
Well, exactly. And I mean, concerns that they expect to fade over time, which really lead them to make this call here. Some concerns: customer capital spending budgets and customer ROI, seeing consistent upside to AI capital expenditures everywhere, but customer comments about quarter-over-quarter progression of spending having an impact on AI semiconductor stocks. So all this really contributing to one of the core points that they make, in addition to competitive dynamics, export control, supply chain concerns. So, even as they're citing these concerns, they're essentially still coming back to the thought process of, despite all of this, they're still best positioned. And we've heard this from some of their other industry cohorts or some of their other industry constituents that are looking at this name. And even as we had heard Goldman Sachs call this a de facto AI play, Morgan Stanley is firmly back in the position of saying, all right, this is our top pick right now. And we'll see exactly where Nvidia continues to move off of yet another bullish rating coming forward from Wall Street.
Wednesday saw Nvidia increase around $330 billion to its stock market value, setting a record for any Wall Street company to gain in a single day after Microsoft and Advanced Micro Devices sparked the AI boom again. With the anticipation that its top-tier chips will continue to be in high demand following Microsoft's announcement late on Tuesday of a significant boost in artificial intelligence spending, Nvidia saw an almost 13% increase in price. Moreover, boosting Nvidia and other chip manufacturers, Advanced Micro Devices increased its revenue projection for AI chips until 2024. Microsoft experienced a 1.1% decline. Microsoft revealed a significant increase in capital expenditures, but a little slowdown in its main cloud business. The wealth of Microsoft shareholders has been transferred to Nvidia shareholders, according to Gil Luria, a senior software analyst at D.A. Davidson. Wall Street's previous record, which Nvidia also established on February 22 with a $277 billion gain, was broken by the company's explosive rise in stock market value. With a current market valuation of $2.88 trillion, Nvidia ranks third on Wall Street in terms of value, behind Microsoft and Apple, NASDAQ AAPL. On June 18, LSEG reports that Nvidia's closing stock market value reached a record-breaking $3.34 trillion. The PHLX chip index saw a 7% increase in one day, the largest since 2022. For the majority of July, the index saw a sell-off due to concerns that a surge in AI confidence had reached an excessive point. It is still down 11% from the closing of its record high on July 10. Microsoft reported that sales at its Intelligent Cloud division, which houses the Azure cloud computing platform, increased by 19% to $28.5 billion. But this figure fell short of analysts' projections of $28.7 billion. Increasing Microsoft's capital expenditures is excellent news for Nvidia's financial performance, as Microsoft accounts for about 20% of the demand for Nvidia's premium AI chips, according to Kathleen Brooks, research director at XTB. Increasing capital expenditure by its largest clients is encouraging for Nvidia's performance, as the company continues to be the top manufacturer of hardware for AI technologies. Microsoft claimed that in order to fulfill demand for artificial intelligence, it must overcome capacity limits and grow its global network of data centers, which is why its capital expenditures, including finance leasing, increased 78% to $19 billion in the quarter. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on NVIDIA's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Bulls are back in the fight. That was a big day. The math adds up when tech leads. Somewhat against my better judgment. I'm going to make a shift to my risk radar where the red light has been on stocks. I'm turning it yellow because today was big, but I feel we have potential for even bigger moves from here into the weekend. The fact that we've gotten this massive rally in Nvidia today, it's the most important thing to see tech lead again. The whole reason why I've had a red or yellow light throughout rotation is because rotation is not good math for the index. Now, however, the reason I'm not turning stocks green, just yellow for now, because I'm convicted there's a big move coming. I don't know which way, but I don't want to have a red light if the big move is to the upside. Here's the bottom line. Today reinvigorated the entire thesis for the tech trade, and that is absolutely crucial. But technically on the charts, we haven't made the big break out yet. Let's look at the past 10 days, really, taking it back a couple weeks.
The stock of Nvidia saw a significant increase during the Wednesday trading session, closing at a gain of 12.8%, as per data provided by S&P Global Market Intelligence. Bullish news in advanced micro devices and Microsoft's quarterly results on Tuesday gave the chipmaker a lift. Both well-known tech companies exceeded earnings and sales projections, and they each disclosed new information that is encouraging for Nvidia. AMD reported a 115% year-over-year sales rise for its data center business in its Q2 report. That's probably good news for Nvidia, even though AMD is a rival in the market. When it comes to producing powerful graphics processing units, GPUs, for data centers and artificial intelligence, AI, applications, Nvidia is the clear market leader, and AMD's second quarter earnings indicate that demand in that space is still strong. The shares of AMD ended the day up by 4.4%. Although the software giant's Azure cloud sector missed some analysts' estimates, Microsoft's stock actually dipped 1.1%. However, this was good news for Nvidia investors. Microsoft, which is rumored to be Nvidia's largest client, announced that it was keeping up a capital spending rise to support its artificial intelligence ambitions. On the heels of Wednesday's jump, Nvidia is trading at about 43 times this year's estimated earnings. That's a growth-dependent valuation, but it doesn't look extravagant when examined in the context of the company's recent performance, competitive strengths, and untapped growth potential. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
SPX, and that's crucial because that's the first step to trying to turn things around. We put a higher low in yesterday, and actually Friday and Thursday we put in a little marginal higher low as well. The gap up here brought us back into the 55, this old gap on the way down, but technically we're still below where we were last week on Monday. So you need to really trade into the 56 area to put in a higher high. And then it seems like we really have a shot at the all-time record. Technically, though, we're still downtrending for the S&P over the last 20 days, which is why I feel like, it's downtrend, red light, but I'm going to give bulls the benefit of the doubt because this really could go either way. The market's basically telling us today that it's celebration from the Fed. Powell telling us that they're getting ready to cut. They see the balance in the market. They're worried a little bit about labor, which they should be, and that means they're going to start to provide some easing. I generally side with the message we heard from Cam Harvey today that the signs of unemployment and yield curve uninversion are all the things that are typically late cycle behavior when the recession is really taking shape underneath. But if Friday's employment report goes well, and if Apple doesn't drop the ball, that could be the hat trick for bulls. So that's why I want to have the yellow light on instead of red, because there's a possibility here that really everything goes smoothly. So far, the earnings this week have generally been positive. Even though Microsoft was down, the fact it was up so big for Nvidia makes it a positive report, because Nvidia matters even more. The catch with Nvidia too, though, is that it's got a lot of resistance on the chart coming up. That's why we're still a good ways away from having the green light on stocks, because Nvidia's got to really fight to reclaim 120. That's going to be a tough level to get through. So that's another reason that there are still limitations here. But if you get the earnings to go as well as they have been so far, generally, Powell today was well received. If employment is surprisingly strong on Friday, that would be the hat trick for bulls to make us feel that we've really got the soft landing and we can have that high correlation rally instead of a high correlation sell-off, but I'm not quite convinced just yet.
Nvidia reported first quarter fiscal 2025 sales of $26 billion, up 262% year over year, and 629% growth in earnings per share. Management predicted that sales would rise by 107% to $28 billion in the second quarter of the company's fiscal year, and that earnings per share would probably more than double once more. The business is expected to release its fiscal Q2 earnings on August 28 following market close. Nvidia is clearly facing enormous expectations, and the price may continue to fluctuate in the weeks before and after the announcement. However, indications point to a sustained high level of demand for its technology, and the company's upcoming release of the Blackwell chip platform later this year appears set to be a significant performance booster. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.